Greetings, traders out there in Traderland. My name's D7 here at Grok Trade. It's Sunday afternoon, March 14th, 2021, and we have a lot to get to. First thing is that you just can't kill this market. It just keeps going higher. Everybody's higher, but the tech stocks under significant pressure when everybody else is up. Silver and gold also under a lot of pressure as of late, but the fear has dropped. We're below 21. There's no fear out there, guys. Bitcoin broke over $61,000. Time of this video, we're just under 60,000. And that's it. All right, let's move here to the markets as a whole and take a look at the technicals. Before I do, I'll say this. If you're an accredited investor, that means you make over $200,000 a year, or collectively with your spouse over $300,000 a year, or you have a net worth of more than $1 million, excluding your primary residence, then I am happy to have a discussion with you about my algorithm. I'll be doing that tonight. If anybody sees this, I'm going to be jumping on at 8 p.m. Eastern. If you're accredited, you know who you are. Feel free to go to groktrade.com/algo. Again, it's only for accredited investors. And I'll be doing that each Sunday night. But anyways, take a look here at the markets as a whole. The S&P 500. S&P 500. This is what's shocking to me, guys. Let me show you this. We had this big rising wedge. We had this big bearish divergence on the MACD, and we dropped down. That was problem city, but it immediately healed itself, come roaring back. This is the S&P 500, blue chip 500, the bluest chip stocks out there, companies out there in the U.S. rallies back above all major moving averages, hitting these highs yet again. Guys, this market is strong. Why? Because of QE, quantitative easing. That's why. The more money you pump into this market, the stocks can only go one direction. How far can we do that? To what end is there? Will this be a house of cards that we're building right now? That's very interesting, isn't it? If you look here at the diamond, same thing, daily chart. We had this jab. We jabbed down below. We rallied back, making all-time highs. Look at this. It's unbelievable. NASDAQ, though, on the other hand, way down. NASDAQ took a bloody beating. Small caps, the Russell's 2000, big jab to the downside, found support off the rising 50-day moving average, rallied straight higher, and it healed itself. What an about face. It turned into kind of a bull flag formation to the upside. Financials, we're up, but we're at major resistance, guys. If you look here, we have resistance. We're at major resistance. Will this prove to be resistance, and when we drop back down here to the support line? If we do that, the markets will follow. Markets are only strong as the financials that are there to support the markets as a whole. Never forget that. Or can we blast through this next week? Can we rally past this major area of resistance? I mean, we could. US dollar, falling wedge. It did break out. It popped up. There's a bull pullback, getting ready to head higher. The US dollar heading higher. That's putting pressure on commodities, guys. And it should be putting pressure on the stocks, but we're just not seeing that. There's no direct correlation or inverse correlation taking place right now. And silver has been beaten way down, but I think this is a bottoming formation. I think that we're going to be looking to go higher. Gold the same way. Been beat way down, but I think we're trying to find a bottom here. Look for this to potentially start going higher. The fear just keeps dropping. This last week, the fear drop. We're in complacent zone city, guys. Bitcoin is up and away. Again, it got over $61,000. We do have a tweezer top at this moment. Look for a reversal to the downside. But guys, overall, Bitcoin is looking stellar. And if I add a line here, I'm going to add this line. It's a pertinent line to have there. It'd be interesting. We need to stay above this trend line and those moving averages. And if so, all is well with this. And a quick look. I'm going to go back to the spider, and I'm going to open up these charts. This is the weekly chart. I want to show you something here. The weekly chart. The weekly chart was that major support we hammered out last week, and we did bounce this past week. Okay, so 2 weeks ago we hammered out. This past week we bounced higher, but we are in a rising wedge, our big rising wedge. And if you look at this, a big bearish divergence on the MACD centered oscillator, that should be bearish going into the future. The only way to heal it is to see this break up above that trend line. This is again on the weekly chart. How do you know that? You can look right up here. I'm using TradingView. There's a link down below for TradingView and what we're using. But this is 1 week. So each bar is 1 week. Now let's look at the month. The month is only halfway through right now. Okay, this is the monthly chart on the S&P 500, and we do have around. We got to get above this trend line right there. And so far we are at this moment, but we need to keep going higher to really remain bullish in this market. But the month's only half over. Anything can happen there. Quick look here at the Grok stock. This tech stocks. I want to show you Apple. Apple this is the monthly chart. I don't want to look at the monthly. I want to look at the daily. Here's the daily chart. Do you see how we went down, 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 down? Apple has been broken, and it broke the eyes way back here, February 17th, and then it just has dropped ever since. Question is, are we putting in a bottom here? If you look at Apple, look at the weekly chart, we had the rising wedge, and this week, that February, mid-February, we broke a major area of support. When that happened, we dropped, and now we have a doji. So that is reversal pattern. There's a good chance of seeing upside potential here on the largest traded security out there today. Well, so I'll say equity in the U.S. Apple. It has the most volume. Nothing compares. So that is very, very, it looks really bullish. Only way that that's going to get bullish, we need to get over $124. If we get over $124 on the weekly chart, that's going to bode really well. If you look at this on the daily chart, $124 is this swing high. If we get above that and above the falling 20-day moving average, which might put us around $24.50, almost $25, we need to get above that to really feel good about that. This being a bottom and this starting to head higher. Something to be watching for. Quick look down. AMD, it's a bear pullback. It could, now Friday we didn't drop like I thought we might. If we stay above the rising 200-day moving average, this big moving average here, if we stay above that and build a high base, this could start heading higher. Amazon, if you look here, Friday should have been the massive drop day because we had a symmetrical triangle. We broke down from the symmetrical triangle. It does a retest, goes up. What was acting as support should act as resistance, and it did. The falling 20-day moving average, it's a blue line there. We dropped this day, but it's not a big red candlestick. I would have thought we'd had another red set of days right here going down, but we found support on Friday. And because of that, that's telling me that we could be finding support up here, and this could be heading higher. Baba in a lot of trouble, heading down very aggressively. I would stay away from that. Baidu is, again, this Friday should have been a big sell-off. We didn't see this in tech stocks. Because we didn't see this, we have a chance going into the future. It's looking pretty good. Booking is looking really good. It's a high base. Look for a high base breakout. Booking looks very, very good. Cisco has defied all odds. Do you see this? Look at this. It hit a double trend line right there. 2 trend lines, and we stopped at it. That was a great place to drop, but the very next candlestick we broke above them. That means all is well with this. So this trend line, I could probably get rid of this one now. As long as it stays above this trend line, all is well with Cisco. Catfish is up and away, looking really good. Look for opportunities there. eBay is struggling, and now these lines have been pierced enough. I can just completely get rid of them. This looks like it's trying to find a bottoming formation right now, eBay. If you look here at Facebook, Facebook broke down a few times of this, but these are big-time jabs. Guys, I don't think that we're going to see these times anytime soon. As long as this price action on Facebook can stay above these moving averages right here in this trend line, expect this to only go higher. Google is building a big high base. If you look here at Google, watch this. And I'm going to pull in the weekly chart. You can see there's a little bit of a chop here, but going sideways. This is saying that there's not enough bears to yank this back down. Look for this to keep heading higher. Again, this is a weekly chart. And let's see here. GoPro's up 10%. Are you kidding me? Oh, it rallied up. It came up and dropped. That black candlestick is something that I'm working on with my algorithm. And for you accredited investors, I do have something that I'll be doing tonight at 8 p.m. Eastern, 5 p.m. Pacific. And just go to Google or groktrade.com/algo to register. And you'll have to confirm that you are, in fact, a accredited investor. But that's something that we're watching on the algorithm. It's saying look for that to drop now. And it's at major resistance, so that high probability of that. Microsoft, stay away from. It's just going sideways. MU, stay away from. It looks broken. Netflix, stay away from. It looks broken. Nvidia should have dropped. Should have dropped here, but we didn't. Look for this debase and then rally higher. Oracle had earnings and not so good. Stay away from. And Palantir is up. Look for a high base and look for more upside. PayPal, same thing. Friday didn't drop. It's crazy. Friday is saying that these bear pullbacks aren't going to come to fruition, or there's a good chance that they won't. There's just a better chance. I would say a 60% chance we're going to start basing and going sideways and then rallying higher. But there's a 40% chance we could still drop pretty aggressively to the downside. We'll know Monday on what happens there. Roku, it could be trying to find a bottom right now. Interesting. Shopify, stay away from. Snap, healed itself. There's the jab. We're heading higher above moving averages. Wow. It's looking good. Tesla, up. Watch for a high base. Look for more opportunity to the upside. Look out. Bounce off that support line. Twitter, down. Kind of a bearish thing. Look, Twitter's in trouble, guys. I'm not as bullish on Twitter. Okay, there it is. Monologue time. What a crazy time that we're seeing here in the markets. And by the way, thank you for watching the Mark the Meerkats and Romulus's videos. Now, let me say this, and I want to be really clear. God forbid if something bad were to happen to me. The only two people in my immediate circles right now who I would trust with my own money would be Mark the Meerkat and Romulus to trade my money for me. They're the only two. Maybe a few others close in line who've gone through our 401. So those are advanced students. And they would have the skill sets to be able to manage my money too. So watching their videos, you're going to learn something from those videos. Make sure that you analyze, you watch, you pay attention, and get as close as you can to Romulus. Get as close as you can to Mark the Meerkat. If you have a desire to manage big money and you want a hedge funds perspective, Romulus is your man. If you have this desire to be a day trader and you want to day trade, Mark the Meerkat is your man. Lean into those guys. They are rock stars. I call them Grok stars. These are individuals who are the real deal. They're traders first, educators second. Never forget that. I think that fundamentally sets us apart from a lot of other individuals, that we have paid our dues. We've been in the trenches. We've been doing this a long time and have lived through multiple market retracements, big market drawdowns. When I first started trading, it was 98. When I say first started trading, getting in and out, swing trading using technical analysis, 1998. In 2000, technology bubble popped. When that happened, I had to learn to tread water and fast. I'm only 2 years in, hadn't got mentored yet, and it was tough. Blew through my first 2 accounts. But I learned so much navigating those turbulent waters in the market correction early in my development as a trader. Thank God I got 2 mentors, one for technical analysis, the other one for fundamental analysis. Fundamental analysis, Al Zangovich is no longer with us. He passed a few years ago. But that specialized knowledge that I retained got me to where I'm at today in my trading. Speaking of that, that allowed me to have the wherewithal to develop one of the most exciting programs I have ever been a part of, and that's the algorithm. The algorithm that I've created, guys, is killing it in the markets. I am allowing that to make my trading decisions today. It allows me to do other things because I have an algorithm, a fancy computer program that I develop. I put my 23 years of trading experience into a program. Started with 6 programmers, narrowed it down to 1. There's only one other person in this world that knows my algorithm. I have it under lock and key. That's what I'm going to be sharing on Sundays. An update on my algorithm, where we're at, what we're doing. So, that is it. That is it. Be interesting to see what next week, this coming week, it's Sunday, so it's the beginning of a week. What this week has for us coming into the markets. We need tech stocks to rally back. Tech stocks have been beat way down. Everybody else is up, but tech stocks is blazing its own trail to the downside. If tech stocks can get some legs and rally higher, that will bode very well for the markets as a whole. We also need financials to get past those trend lines and to keep going higher. It's had a good run. We're at major resistance. We saw that. Rewatch the video. We need financials to get strong, but we need the support of tech stocks to move higher. As of Friday's movement on most of the major tech stocks, I think there's a good chance to see sideways motion and more upside opportunity. That's what it looks like right now. If we go red on Monday, all bets are off. Okay. It could get slippery because financials are at resistance. Look for that to retrace and look for the market gains that we've had to pull back some. Look for tech to continue lower. Monday is very important to me. Let's see what happens and let's watch that very closely. So anyway, it's Sunday morning my time. No, it's afternoon. It's now afternoon. I hope the best for each and every one of you. Take care. Very safe trading. We'll catch up with you guys later. Bye. Whoa. Let me interrupt just a quick second. There is a problem with this video. There's a problem actually with all trading videos. And actually, there's a problem with all trading videos and books. The need you have is not more information. Here's the secret. Are you ready? I have to stand up for this one. It's not about more information, more data. It's about the assimilation of that information. The fastest and most effective way for us to help you as a trader is to mentor you. And mentoring is the very thing that got me to where I am today. Click the link below. Get started and do so today.